What if I told you that you could potentially double your money, or even more, in a year by making smart, calculated investments? And what if I told you that these investments are inspired by none other than Warren Buffett himself? That's right. The Oracle of Omaha, one of the most successful and admired investors of all time, has carefully curated a portfolio filled with companies that are not just stable, but are also poised for massive growth. And here's the kicker. You don't need to be a billionaire or a financial expert to get in on the action. These opportunities are accessible to everyone. In this video, we're diving deep into Warren Buffett's top stock picks, breaking down not just what they are, but why they're so promising. We'll explore the strategies behind his choices and how these companies are leading the charge in innovation and industry dominance. From a leader in consumer technology that's redefining how we live and work, to a financial services giant that's shaping the future of global banking and more. If you're serious about growing your wealth and making informed decisions, this is the one video you absolutely need to watch all the way through. Because I'm not just listing stocks for you to consider, I'm equipping you with the insider knowledge, analysis, and context you need to make smart, informed investment decisions. If you find this valuable, hit the like button, share this video with your friends and family who are also looking to invest wisely, and leave your thoughts in the comments below. I'd love to hear your take on these stocks. Don't forget to subscribe to the channel and hit the notification bell so you never miss an update on the latest financial insights and investment opportunities. Now, before we dive in deeper into today's list, I want to let you in on a little secret that could completely transform how you invest and grow your wealth. This video is sponsored by Forecaster Terminal, a tool I've been using to uncover these incredible stocks, and honestly, it's been a game changer for my research. This software, powered by the Forecaster AI agent, uses cutting-edge artificial intelligence to analyze all financial instruments, whether it's stocks, ETFs, cryptos, indexes, forex, and even commodities. It's like having your own expert financial analyst working around the clock to give you the most accurate insights and uncover new opportunities. With Forecaster, I can quickly identify value stocks, growth stocks that are ready to break out, and even spot seasonal trends in the market that most investors overlook. I can spot insider transactions in seconds. The political tool tells you when politicians are buying or selling shares in a company. It's designed to help you find opportunities, reduce risks, and make smarter decisions that could grow your wealth faster than you thought possible. So, if you're ready to take your investing game to the next level, click the link in the description now to try Forecaster Terminal for free, and use my code Galore10 to get a 10% discount when you sign up. Let's kick things off with a company that needs no introduction. Apple, ticker symbol AAPL, a name synonymous with innovation, design, and a relentless pursuit of excellence. Over the years, Apple has transformed from a scrappy startup in a garage to one of the most valuable companies in the world. It's a story of vision, resilience, and a deep understanding of what consumers want, often before they even know it themselves. You know them, you love them, or maybe you're more of an Android person, but still, Apple's influence is undeniable. Whether it's the sleek design of their products, the intuitive user experience, or the sheer cultural impact, Apple has a way of making its presence felt in every corner of the globe. Apple is a global behemoth, and their grip on the consumer electronics market is nothing short of impressive. From the iPhone to the MacBook, their products have become staples in both personal and professional settings. But it's not just about the hardware. Apple has built an ecosystem that keeps users coming back, creating a seamless experience across devices that's hard to replicate. But here's the thing. Apple's not just resting on their laurels. They're not content with being a leader. They want to redefine what leadership means. Behind the scenes, teams of engineers, designers, and visionaries are constantly pushing the envelope, exploring new technologies, and finding ways to make their products even better. They're constantly innovating, pushing the boundaries of what's possible with every new iPhone, iPad, and MacBook release. Each product launch is an event, a moment that captures the attention of millions around the world. And it's not just about the products themselves, it's about the experience, the story, and the promise of something extraordinary. Think about it. When was the last time you went a full day without interacting with an Apple product or service? Whether it's checking your iPhone for messages, using your MacBook for work, or tracking your fitness on an Apple Watch, Apple has woven itself into the fabric of our daily lives. It's not just a brand, it's a lifestyle. From their sleek hardware to their ever-expanding ecosystem of apps and services, Apple has seamlessly integrated itself into our daily routines. The App Store alone has revolutionized the way we access software, creating opportunities for developers and delivering value to users in ways that were unimaginable just a decade ago. And that, my friends, is the hallmark of a truly great company. Apple doesn't just sell products, they create experiences. They build connections, they inspire loyalty, and that loyalty is something most companies can only dream of achieving. Now I know what you're thinking. Apple's stock is already so expensive. With a market cap that dwarfs the GDP of some countries, it's easy to wonder if there's still room for growth. Is it really a good buy right now? Should you invest in a company that's already achieved so much? These are valid questions and they deserve thoughtful answers. And to that I say, absolutely. Apple's story is far from over. In fact, it's just getting started. With a track record of consistent growth, a pipeline of innovative products, and a loyal customer base, Apple is well positioned to continue delivering value to its shareholders. You see, Apple isn't just a company, it's a cash-generating machine. Their financials are rock solid, with billions of dollars in revenue and profits that most companies can only dream of. And they're not just sitting on that cash, they're using it to fuel their growth. They have a war chest of billions of dollars, and they're not afraid to use it to buy back their own stock, develop new products, and expand into new markets. This kind of financial firepower gives Apple a level of flexibility and resilience that's hard to match. But it's not just about the numbers, folks. Apple's success is built on more than just financials. It's about the people, the customers who believe in the brand, the employees who bring the vision to life, and the investors who see the potential for even greater things ahead. Apple has a loyal customer base that's the envy of the tech world. People don't just buy Apple products, they buy into the Apple experience. They line up for days to get their hands on the latest iPhone, and they're willing to pay a premium for the quality and innovation that Apple delivers. That kind of brand loyalty is invaluable, and it's a major reason why Apple is positioned to continue its dominance for years to come. It's not just about selling products, it's about creating a community, a sense of belonging, and a shared vision for the future. Now let's talk about why Apple is a particularly strong pick during a market sell-off. When the market gets shaky, investors tend to flock to safe haven assets. And Apple, with its rock-solid financials and consistent performance, fits the bill perfectly. They're a blue-chip stock in every sense of the word, and their sheer size and scale provide a level of stability that's hard to find in today's volatile market. Apple has reached an astonishing market cap of $2.98 trillion, reinforcing its place at the top of the global business landscape. The company posted an earnings per share of $6.31, and with a P/E ratio of 31.40, investors continue to price in high expectations. For 2024, Apple generated $391.04 billion in revenue and recorded a remarkable net income of $93.74 billion. Despite a relatively modest dividend yield of 0.50%, the company remains a powerhouse in terms of profitability and brand dominance. A major catalyst for Apple's recent stock surge was the tariff exemptions granted by the U.S. government. These exemptions, covering smartphones, computers, and other electronics primarily imported from China, helped ease fears surrounding supply chain disruptions and rising production costs. The market responded swiftly, with Apple's stock climbing over 6% after the announcement. This regulatory relief has provided a crucial tailwind amid the ongoing uncertainty in U.S.-China trade relations. In its most recent earnings call, Apple reported record-breaking quarterly revenue of $124.3 billion, a 4% increase year-over-year. Services alone contributed $26.3 billion, marking a 14% year-over-year growth, while iPhone sales hit $69.1 billion, boosted by the launch of the iPhone 16 and record revenues in multiple global markets. On the product innovation front, Apple continues to raise the bar with its push toward AI integration, dubbed Apple Intelligence, across devices like the iPhone and Mac. These innovations have been met with high customer satisfaction, further solidifying Apple's competitive edge. However, not all signals are entirely bullish. While the current trade environment has been favorable, President Trump has hinted that these tariff exemptions might be temporary, introducing a level of political risk that investors can't ignore. Broader concerns remain about market volatility, driven by trade disputes and potential retaliatory tariffs from global partners. Still, Apple's expanding footprint in emerging markets has helped counterbalance slowing growth in more saturated regions like China. With a high Altman Z-score, a solid Piotrowski F-score, and a benign Beneš M-score, Apple's financial health is sound. And while valuation models suggest the stock might be trading at a slight premium, its diversified revenue, strong balance sheet, and aggressive buyback programs make a strong case for long-term growth. High insider confidence and significant institutional ownership only strengthen that argument. Apple's brand recognition, ecosystem lock-in, and efficient capital allocation make it one of the most formidable companies in the market today. As you can see from the breakdown, Apple is a company with a proven track record of innovation, a loyal customer base, and the financial firepower to weather any storm. If you're looking for a long-term investment that has the potential to generate significant returns, look no further than the tech giant that keeps on growing. Now let's move on to a company that's near and dear to my heart, Berkshire Hathaway, ticker symbol BRKB. This isn't just another name on Wall Street, it's a symbol of enduring success and a masterclass in the art of investing. Founded in the 19th century as a textile manufacturing company, Berkshire Hathaway has transformed into one of the most valuable and diversified conglomerates in the world, thanks to the vision and leadership of one man, Warren Buffett. This isn't just any company, folks, it's a living, breathing example of how patience, discipline, and a keen eye for value can create something extraordinary. Berkshire Hathaway is not just a business, it's a philosophy, a way of thinking about money, risk, and opportunity. This is Warren Buffett's baby, the culmination of decades of investing wisdom and a testament to the power of long-term thinking. Buffett didn't just build a company, he built a legacy. His approach to investing has inspired millions and redefined what it means to be a successful investor. When you invest in Berkshire Hathaway, you're not just buying stock in a company, you're investing in Warren Buffett's brain. You're tapping into a lifetime of experience, a treasure trove of knowledge, and a mindset that prioritizes long-term gains over short-term wins. Now, Berkshire Hathaway isn't your typical tech darling or flashy growth stock. It doesn't make headlines for launching the next big app or disrupting an industry overnight. Instead, it quietly goes about its business, delivering consistent returns and building value over time. They're a conglomerate, which means they own a diverse portfolio of businesses across a wide range of industries. This isn't just diversification for the sake of it, it's a carefully curated collection of companies that complement each other and contribute to the overall stability of the business. We're talking everything from insurance, Geico, Anyone, to railroads, Burlington, Northern Santa Fe, to consumer goods like Duracell and Dairy Queen. Each of these businesses plays a unique role in Berkshire Hathaway's ecosystem, providing steady cash flow and opportunities for growth. This diversified approach is a key part of Warren Buffett's investment philosophy. He doesn't put all his eggs in one basket. Instead, he builds a portfolio that can weather economic storms and thrive in different market conditions. He understands that no single industry is immune to downturns, so he spreads his bets across a wide range of sectors. This strategy not only minimizes risk, but also maximizes the potential for long-term growth. This creates a level of stability and resilience that's hard to find in today's market. In a world where volatility is the norm, Berkshire Hathaway stands out as a beacon of consistency and reliability. But it's not just about diversification. Warren Buffett's genius lies in his ability to identify undervalued companies with strong fundamentals. He looks for businesses with a competitive edge, solid management, and the potential to generate consistent earnings. Warren Buffett is a master at identifying undervalued companies with strong fundamentals and holding on to them for the long haul. He doesn't get swayed by market noise or short-term trends. He's not interested in chasing the latest fads or trying to time the market. Instead, he focuses on the intrinsic value of a business and its ability to generate wealth over time. He's all about finding great businesses at reasonable prices and letting them compound their earnings over time. This is the magic of compounding, small, consistent gains that snowball into massive returns over the years. And that's exactly what makes Berkshire Hathaway such a compelling investment, especially in volatile markets. It's a safe harbor in a sea of uncertainty, a place where your money can grow steadily and securely. When the market is going haywire, investors tend to panic and sell off their holdings, often at a loss. But Berkshire Hathaway, with its diversified portfolio and Warren Buffett's steady hand at the helm, has a history of weathering market storms and coming out stronger on the other side. Think of it this way. Investing in Berkshire Hathaway is like having Warren Buffett as your personal portfolio manager. He's already done the heavy lifting of identifying promising companies and building a diversified portfolio. All you have to do is buy in and let the magic of compounding work its wonders. It's a simple yet powerful strategy that has stood the test of time. With a market cap of $1.13 trillion, earnings per share of $41.27, and a P/E ratio of just 12.70, Berkshire offers investors a value-driven alternative with solid upside potential. The company reported $424.23 billion in revenue for 2024 and an outstanding net income of $89 billion. Buffett's long-term investment strategy continues to pay dividends, figuratively as Berkshire doesn't actually issue one, with Class A shares now reflecting a staggering cumulative return of over 6.31 million%. That's not a typo, and even in a turbulent market, Berkshire has managed to outperform the S&P 500 year-to-date, demonstrating its resilience. Articles have increasingly spotlighted Buffett's portfolio, urging investors to consider his holdings during uncertain times. Financially, the company is rock solid. A profit margin of 26.02% and return on equity of 13.7% highlight operational efficiency, while a low debt-to-equity ratio of 0.18 speaks to a conservative and disciplined capital structure. The company maintains a healthy Altman Z score of 3.2, a neutral Piotrowski F score, and a reassuring behemoth score of -2.79, all of which signal minimal red flags in terms of financial manipulation or insolvency risk. So far in 2025, Berkshire has added nearly $87.81 billion in investor wealth, bolstering confidence in its long-term outlook. Still, Buffett has made it clear that caution is warranted. With over $334 billion in cash reserves, Berkshire is well-positioned to seize opportunities when they arise, but that level of cash also reflects a more cautious outlook on today's valuation levels and macroeconomic environment. Unlike Apple, Berkshire hasn't pursued aggressive buybacks recently, but it makes up for that with steady, long-term growth, diversified revenue sources, and geographic breadth. The company's moat rating of 9 out of 10 reflects its competitive advantage across sectors, thanks to factors like brand strength, switching costs, and scale efficiency. And notably, there have been no major concerns regarding insider trading or politically motivated activity, reinforcing the company's image as a bastion of sound, ethical financial stewardship. So, whether you're a seasoned investor or just starting out, Berkshire Hathaway is a solid choice for anyone looking to build long-term wealth. It's not about getting rich quick, it's about getting rich slowly and surely. It's a testament to the power of patience, discipline, and a long-term perspective in the world of investing. Warren Buffett's approach reminds us that sometimes, the best way to win is to play the long game. So, the next time you think about investing, remember Berkshire Hathaway. It's more than just a company, it's a blueprint for financial success, and a lesson in the art of thinking long-term. After all, who wouldn't want to invest in Warren Buffett's brain? So there you have it, 2 of Warren Buffett's top stock picks that have the potential to supercharge your portfolio. Remember, investing isn't about getting rich quick, it's about making smart, informed decisions and staying the course for the long haul. And who better to learn from than the Oracle of Omaha himself? Now, I want to hear from you. Which of these Warren Buffett stocks are you most bullish on? Are you adding any to your portfolio? Let me know in the comments below. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members there get full in-depth analysis on most of these stocks I mention here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Don't forget to hit the like button, share this video with your friends, and subscribe to the channel for more epic financial content. Until next time, happy investing.